Hi there, welcome to Kneppy Invest. Over 200 companies listed on the ASX in 2021. It was a record year, and it makes sense because the market was quite buoyant, and a lot of companies wanted to take advantage of that, raise some money, improve their balance sheets, that sort of thing. And one of those companies that did list on the ASX in 2021 is the company I'll be featuring in today's video, hence the title, Introduction to BirdDog. Now, BirdDog was one of the companies that waited to the last second to list in 2021, listed on December 20th, which means they have only been listed on the ASX for about 2.5 months. Now, typically, I like to wait at least 6 months before I even think about taking a position in the company, unless the company releases a profit upgrade. So for BirdDog, either they need to release that profit upgrade, or I'll just wait another 3 months before I look at how they're performing financially, how the stock or the share price is performing as well. That's a very important part, because a lot of times when a company IPOs, a lot of hype is in the initial release, the initial IPO, and we sometimes will see the share price pull back a fair bit. Not always. Sometimes the complete opposite can happen. Now, I had never heard of BirdDog before I did some research on the company in preparing for this video. And no, BirdDog is not about genetic splicing. They have not created a new super pet. Completely different. It's all about video technology. BirdDog themselves describe the company as a global video technology company that enhances the quality, speed, and flexibility of video through a range of solutions augmented with NDI, network device interface. Some of that does go over my head. I'm not an expert in anything they're describing there, particularly NDI. I had a little bit of a closer look to what this company does. It does seem like a lot of their products are aimed towards broadcasters. They have a lot of products, to be honest with you, and more products coming online soon, new products. So just a few of their product suites include pan, tilt, zoom, range, robotic cameras. They have 10 different models of those, PTZ. They also have 8 converters. Converters bridge the gap between old traditional baseband video and NDI. AV products, also software, 8 proprietary software platforms for managing and controlling NDI workflows. So it does seem like they're all about NDI, network device interface. BirdDog was founded in 2016, listed on the ASX 20th of December 2021, so a relatively new company on the ASX. And I do like to wait a little bit of time to see how the company is performing before I even think about taking a position. And also, the initial hype in this company has waned away. Be able to see that waning hype, if there was any hype, when we look at the chart. Now, a lot of skin in the game when it comes to management and the board. In fact, the CEO and co-founder, Daniel Charles Miao, has a 22% holding in the company. Another one of the co-founders also has a 22% holding, and another co-founder on the board has about, I think it's about a 7 or 8% holding. So if you add together all the founders or co-founders of this company, it totals more than 50%. So definitely skin in the game. The only question is whether over 50% skin in the game is absolutely beneficial for the company and shareholders. That's a little bit too much power. Possibly, you could argue that. Market cap of BirdDog at 33 cents. Last time I looked at the share price on the 9th of March is 67 million, and the ticker code for the company is BDT, which stands for BirdDog Technologies. BirdDog did release their very first Appendix 4C for a quarter towards the end of January. This was their first financial report. They've also released a half yearly. I'll touch upon the half yearly in the next few slides. So let's have a look at their quality results. And this is the first sign we have of how the company is performing. Receipts to customers, 7.8 million. So they have a fair bit of receipts coming in on a quarterly basis. But you notice right down the bottom, they were operating cash flow negative by 8.3 million. Seems a lot. Just above that, they have an interesting line, 1.8 other, which is inventory deposits, 7.1 million there. No idea what that means, but in their commentary in this quarter report, they did say Following the IPO capital raising, management have now begun the process of investing in supply chain enhancement via the build-out of inventory in anticipation of the continued growth in the sales volumes of its core products, along with ensuring continued minimal impact from ongoing global supply chain challenges. So possibly that inventory deposits was just massively increasing the amount of inventory they have on stock. Now, one of the reasons they did do a capital raising, and we'll touch upon the balance sheet, in fact, I have a dedicated slide for the balance sheet, was to improve the balance sheet. And they've really improved the balance sheet. In fact, one of the reasons why a company will IPO is to improve the balance sheet. And this company has definitely done that. And it really starts with the cash on hand. They began this particular quarter as not a publicly listed company with $3.6 million. The capital raising was for $33 million. And because of some payments in investing, operating activities, because of the operating cash flow out of the business, they actually did end the quarter with $30.5 million, even though the capital raising or the IPO process brought in $33 million. They also have net debt or debt of $5 million, which means they have net cash of about $25 million. So if you look at the market cap, which is in the $60 million range, net cash of $25 million, which means the enterprise value of BirdDog is in the $40 million area. Not long after BirdDog released their first ever Appendix 4C, they also released their half-yearly numbers, so we can see what revenue is, gross margins, profit, all that chat. So right now, revenue is at $24 million. Now, when you look at the revenue growth for this company over the past few years, it's been very impressive. And I'll show you the revenue growth that this company has experienced. So looking at current revenue in this particular half year and comparing it to 1 year ago, it doesn't look that impressive. But when you look at the broader picture over a 3-year time span, it's way more impressive. So revenue's grown from 21.5 million to 24 million. Gross margin actually fell during the year, fell from just above 28% to around 28%. So no large changes in gross margins. I would hope maybe over time that gross margins slowly go up through time. Definitely have that possibility. Operating cash flow negative by $9.1 million in this particular half year. And I think a lot of that was because of inventory buildup. Previous year, they were operating cash flow negative by $3.4 million. But when you look at profit, 1 year ago, they were profitable by $2.1 million. Now, they're unprofitable by $755,000. Doesn't seem too excessively large. Now, when it comes to the working capital, the whole reason I think this company decided to do or list on the ASX is because of the working capital improving the balance sheet. So 1 year ago, they had working capital, and working capital is simply net assets minus net liabilities. Now, typically, you want net assets to be way higher than net liabilities. Doesn't always work like that. But 1 year ago, net assets and net liabilities were almost identical. Now, net assets exceed net liabilities by $46 million. So that's working capital. And we'll have a look at the balance sheet to see where all the improvements came. For instance, cash. Also, potentially accounts payable, accounts receivables, inventory is another way you can improve working capital if you build up inventory levels. Net cash of $25 million, I've already mentioned that. So that means the enterprise value of this company is $42 million. I forgot the dollar sign and the M there. 42, that's $42 million. And the EV to sales ratio is around 1. That does not seem too excessive at this point in time. So I wouldn't say that the market has got a little bit too hot for this company or is overvaluing BirdDog right now. So let's have a look at the balance sheet for BirdDog, and this has substantially improved from 1 year ago. So 1 year ago, total current assets were $21.3 million and current liabilities was $21.1 million. So they had a working capital of about $200,000 or something like that. Cash has increased over the past year from $9.3 million to $30.5 million. The whole reason it's increased was because of the IPO, and that's probably the reason why they wanted to become a publicly listed company, is to improve the balance sheet, to bring more cash on hand, to also increase their inventories. Receivables increased from $620,000 to $6.8 million. Now, that doesn't mean all that receivables will turn to cash eventually, but a lot of that will turn to cash because that's the whole point of receivables, or the whole process of receivables is it's cash that will come eventually. Inventories has increased from 11.3 million to 16.4 million, which means total current assets increased from 21 million to 54.5 million, a substantial increase in total current assets. But sometimes you get likewise increase in total current liabilities. Let's see if current liabilities rose by the same amount. Payables increased from 1.6 to 2.1 million. I always like to compare receivables to payables, and sometimes you'll see the same sort of increase. But in this case, receivables increased by 6.1 million, payables by only 500,000. So this company is going to be receiving a lot more cash in the future than they have to spend when you compare the receivables to the payables. And the other important thing when you look at the current liabilities, borrowings down from 13.9 million, actually almost 14 million, to 5.1 million. They also had other financial liabilities last year, 4.8 million, and that has been wiped away. So total current liabilities actually fell from 21.1 million last year to 8.7 million this year, which means their working capital, which is all about the way you calculate working capital is you subtract total current liabilities from total current assets. It means the working capital of this company went from almost zero to about $46 million. And that actually equates to the total equity. So if you look down the bottom, total equity went from 400,000 to 46.9 million. Again, one of the reasons this company decided to list on the ASX was to improve their balance sheet, and they've definitely done that. It also gives management a lot more flexibility in the future to grow for the shareholders and also for themselves. They have a lot of skin in the game. I quickly went through BirdDog's prospectus, and there's something like 170 to 190 pages in the prospectus. And if you've never seen a prospectus and you are interested in a company that has recently IPO'd, I do recommend actually going through the prospectus because you get a trove of information in the prospectus, not only about the company, but also about their sector the business is in. You can see how they think the sector is going to grow. You also can see exactly in pretty good detail what BirdDog does, how they think they're going to grow in the future, their client base, their products. They have a pretty detailed product category list, so you can exactly see what products they have. So highly recommend, if you are doing research on a company and that company has just IPO'd, go through their prospectus. You don't have to go through all 190 pages. You just can pick and choose what you're going to read, because large sections of the prospectus can be skipped. Anyway, one of the things that really stood out for me when I went through BirdDog's prospectus was just the growth in revenue over the last few years, climbing from $2 million in financial year 2019 to $9.5 million in financial year 2020 to $38.2 million in financial year 2021. More than likely, that revenue growth won't continue in financial year 22 based off the half yearly, but we'll still see some growth. So fairly impressive growth right now. And another reason I think they wanted to list on the ASX was to continue growing at a really good rate in the future. And there is a possibility they will do that. Now let's have a look at some of the information in the half yearly. And what I'm going to do in the next two slides is look at the breakdown of revenue by region and revenue by their groups or the divisions or their product suites. And it's really interesting to see that the majority of the revenue comes from the Americas. 46% of BirdDog revenues come from that area. So it's probably Canada, North America, maybe Central America, Mexico, maybe South America. So they really haven't broken down exactly where in the Americas. But I would say, and I am assuming here, and sometimes when you do assume, you might make an ass of you and me. But I'm assuming the majority of the revenue in the Americas is United States. 22% of the revenue, or 32% of the revenue is EU, European Union and UK, and 22% is the rest of the world. So this company is a global company with the majority of the business in United States. Again, I'm assuming there. And the best growth in the company based off the regions is in the Americas, where revenue has grown from 8.7 million to 11.4 million. So that's looking at half year 21 to half year 22. In EU, UK, no growth at all, 7.5 million. And in the rest of the world, actually revenue did drop by $100,000. I would say, and again I'm assuming here, that a lot of this lack of revenue growth we've seen in EU, rest of the world, could be attributable to COVID-19. But I don't want to put words into manager's mouth here. I'm just making an assumption right on the spot. Now let's have a look at the revenue by group, or maybe product suite. I want to see a good distribution, an evenly distributed revenue, probably focused more on the higher margins. I have no idea which of these is higher margins. Haven't done enough research on the company to know exactly that. But 50% of the revenue is through converters, 41.4% through the cameras, 6.4% controllers, and 1.9% monitors and AV. And they've all grown over the past year. So pretty good growth in converters and cameras, and fairly good growth in controllers, and new growth in monitors and AV because they had no revenue in that division 1 year ago. Now onto the most disappointing aspect for BirdDog, and probably for their shareholders, and that's the share price performance since they listed on the ASX. Even though they've only been on the ASX for about 2.5 months, during such a time period, we can see pretty rapid movements in the share price, and that's exactly what BirdDog share price has done during that period. Now, when BirdDog did list on the ASX, the share price was around 70 cents. The following 5 trading days, share price actually did rise to a high of 76 cents. But during January and February, share price of BirdDog rapidly fell. I'm not sure if there's some sort of shareholder selling out or just a lack of interest in the market, but the share price was pushed down from 75 cents to a low of 30 cents, and that low was reached towards the end of February, beginning of March. There was one trading day in March. The share price briefly fell below 30 cents. But it does look like share price is going sideways now. Now, it's only been going sideways for about 2 to 3 weeks, so a very short period of time, and we can't really confirm that yet. This could be just a little sort of a pause in the downtrend, but definitely the share price of BirdDog is in a short-term downtrend. We don't have a large enough amount of trading days to determine whether BirdDog is in a medium to long-term downtrend, but definitely negative sentiment in BirdDog right now, short downtrend in the share price, and even though the share price has been going sideways the last 2 or 3 weeks, I like confirmation that this downtrend has come to a completion. There's quite a few things to like about this company, but definitely the chart is not one of them. That's all I have for this introduction to BirdDog. If you have any questions about this company, or maybe any other company that has recently IPO'd onto the ASX, I'd love to hear your opinion. Are you an investor of BirdDog? Why did you buy into this company? I'd be shocked if anyone watching this video does have a position in this company, because it is quite an obscure company right now. Not a lot of information out there. I haven't seen anyone talking about this company, and so maybe now is the time to get aboard the BirdDog Express. Now, the last thing I should say is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day. Bye.